Hi, good afternoon, everyone. This is Margaret from CMC Singapore, and today we're going to talk about Brexit and what does Brexit mean to investors. Okay, this is a standard disclaimer. You can take a look at it later on. So, Brexit or not to Brexit? This is really a tough question and the most watched event in these few days. And all the investors and traders in the world are now eyeing on the outcome of this EU referendum to be announced from tomorrow onwards, and final decision will be came out time on this Friday. And it's going to have a big impact to the market, including forex currencies, equities, treasuries, and commodities as well. So although that in the last 2 days we have seen a risk-on rally because we have seen more supporters are leaning towards a Remain camp according to the recent votes. However, we just can't completely rule out the possibility of a Brexit outcome, and there are still a lot of uncertainties ahead of us over the next 48 hours. So in case of a Brexit happens, and that will be a big impact to the sterling at first place. And over the last 2 days, sterling have rallied quite a bit, over 600 pips, as market is trying to somewhat pricing in an outcome of a Remain vote. But we need to remain cautious on it. And if the result came out to be a Remain vote, we may probably see more upside of the sterling. And the next impact will be the interest rate decisions by the Bank of England. And here as well, we hear two different types of opinions. Someone thinks that if the sterling continues to fall, and Bank of England may start to increase the interest rate in order to support the currency. And if that really happens, that means the mortgage rates are going to rise and the cost of borrowing are climbing up. And this is really a bad news for the properties market. And it will also have an impact to the central bank's policies, including Bank of Japan, Bank of Switzerland, and European Central Bank, and even the Federal Reserve. They are watching on this event. So a lot of central banks, they are holding back the rate cutting ahead of the EU referendum in order to keep their powders dry to carry out more stimulus or easing policies after the EU referendum. And in the long run, it will have an impact to the economic growth, as previously the IMF as well as BOE, ECB, they have all warned to investors that if a Brexit happens, it may lead to economic recession within UK as well as the European Union area. So it will have an impact on the European Union, definitely, and the rest of the world. Because the first question that raised in people's mind will be, will other countries follow the UK to leave the EU? And this will raise a lot of doubts on the institutional stability of the Eurozone. And as a result, uncertainties will rise, which is something that market dislikes. So the capital will hunt for safety, and here is where we need to keep an eye on the safe haven assets such as gold and silver, treasuries, as well as Japanese yen and the Swiss franc. Okay, and in this slide, I have plotted out the roadmap of Brexit and possible outcomes. And in the immediate term, it will have an impact on the currencies market, of course. So on one side is the sterling and euro, on the other side is the US dollar, Swiss franc, and Japanese yen. And as there are more uncertainties, the stock market will get hammered, especially the European stock markets. Okay. Then the next will be the interest rate decisions by Bank of England, and this will have an impact on the cost of borrowing and mortgage rates, and ultimately affect the property market. And finally, in the long run, it will raise more doubts on the global on the stability of the Eurozone, and global uncertainties will rise. So there will be demand for safety. Okay, and let's have a closer look at the sterling dollar. I have taken this snapshot this afternoon. So over the last 2 days, we have seen a big rally of sterling dollar. Okay, about from the bottom to the top, it's over 600 pips, a very big jump. And here we are taking a very short break here at 61.8% Fibonacci extension level, which has been tested 3 times over the last 2 months. Okay, here's the immediate resistance level. And according to this Fibonacci retracement I have drawn, the potential upside is here, the 100% Fibonacci level, 1.5197 area. Okay, this is the potential upside. And downside is right here, 0%, 1.3832, which is also the multi-year high. I'm sorry, multi-year low. And in between, you can also find all these minor support levels, 1.451, 1.435, 1.415. Okay, and according to the market client sentiments, majority of CMC's clients globally are taking short positions by the position value. Okay, 84% short sell sterling. Okay, and here is the basics for forex trading for those who are beginners. So one standard lot in forex trading is 100,000 units. So 1 pips is 10 to the power of -4. So 1 pips of movement in one standard lot is translated into $10 of profit or losses. So I have using this euro-dollar example. On the day itself, there is a 200 pips jump in the euro-dollar, and this 2 pips jump will be translated into 2,000 US dollars of your P&L. Okay, if you're taking the right position, you are making $200. If you take the wrong position, then you lose $2,000. So risk management is very, very crucial. And here is I'm going to introduce you about all of our order types. Okay, we have market order, and under market order, there's a function called boundary. Boundary is here. So boundary is a very useful function that to prevent a big slippage of your order when you submit and when the order is executed. So if the market movement is outside these boundary points, the order will not be done, it will be rejected in order to protect you. Okay, and of course we have limit orders, we have stop entry orders, take profit orders, and most importantly we have 3 types of stop loss orders: the normal stop loss, the trailing stop loss, and finally the guaranteed stop loss order. And this is a unique function in CMC's platform. It's important to protect you from a big gap up or gap down, and we will still honor your orders within this gap. Okay, so do make use of all these different order types to make your trade more successful. And market calendar is another very useful function. You can find it under market pulse. Okay, market calendar. And here is you can keep yourself updated on all the important events in the market, especially for forex traders and indices traders. Okay, you can select the countries you like to watch on, and you can select the market impact, the high impact or medium or everything. So do use it. And finally, I would like to recommend this pattern recognition function. It's a very powerful tool because we have over 10,000 different products in our platform. So it's almost impossible to do a manual screening on each one of them. So here's where the pattern recognition comes from. It only takes you a few seconds to do a screening throughout all of our products, and they will find you all these patterns, for example, triangle or double bottom or triple bottom or a channel. So everything you can find it here. It's a very powerful tool. Alright, so that's all for my presentation today. Thank you for watching and enjoy trading.